Friday, January 5th, 2018, Monaco 64, home of alternative economics and contrarian views. I was going to look at a long-term chart of the Dow, seeing that we're making all-time highs every day right now. But looking at the chart, I decided to look at why the Federal Reserve actually hates gold or doesn't want the public to get involved in gold and wants to keep asset prices high, i.e. keep the Dow high. So we need to go back all the way to the inception of the Federal Reserve and the start of World War I. Thanks for a bar chart, I can do that. So Federal Reserve was created, just at the end of 1913. This chart starts from the fourth quarter of 1914. The war had kicked off. The New York Stock Exchange reopened. And the Dow went from basically 50 to a high of 110 during World War I. And then the Americans joined in the war and the Dow went down. But as Smedley Butler said, war is a racket. The big American corporations' profits increased astronomically, and that's why we saw the Dow do that. And you had a central bank now to help along. The Dow came off and then went back up in just before 1920, and then we saw a big drop to a bottom in 1921, and that was kind of a recession, depression, short depression after World War I. Then we had the Roaring '20s, and one of the main reasons for this event, the Roaring '20s, and moving the Dow from around 60 to almost 400, was that the Federal Reserve accommodated the Bank of England over in Europe. The UK was in trouble. They wanted to keep the pound pegged at the same level to gold that it was before World War I. And the only way they could do that is for the Americans, the Federal Reserve bankers, to help the Bank of England bankers by keeping interest rates low. And that's why we had the Roaring '20s era of easy money. So it was kind of an experiment like we have today. We've had with QE and money printing, zero interest rates, negative interest rates. So we've had the roaring, teens. And why did the Federal Reserve hate gold then? You can notice that this move from 1914 to 1929 was enabled by the Federal Reserve. Prior to that, the U.S. did not have a central bank or hadn't had one for many decades. And the Federal Reserve was supposed to come in, make the currency flexible or elastic, and eliminate economic boom and bust. So, and then in 1929, of course, we had the crash of '29, and it continued, and the Dow actually dropped below 50, which is pretty much where it was when the Federal Reserve had been created. So that was a clear vote from American businesses, investors, that the Federal Reserve had failed. That's my opinion. And it got so bad that in the first quarter of 1933, when President Franklin Delano Roosevelt, who's usually known as FDR, but I think he should be known as FR for Federal Reserve, that's when he came in and saved the Federal Reserve. Because the bankers were in trouble. Why were the bankers in trouble? Well, he had to declare a bank holiday, 1933, in March 1933, because everyone, all the banks were failing. People were going to their banks and taking out gold, their gold, because back then gold was money. $20 banknote just meant you could take your gold out, your double eagle, or whatever, how much gold you had. And the banks were failing because people didn't want, lost confidence completely in the system. And that's shown by the Dow chart and all the bank failures. So what did he do? He declared the bank holiday, and then a few months later, or a month later, he signed an executive order to confiscate gold. And it says, under executive order of the president issued April 5th, 1933, all persons are required to deliver on or before May 1st, 1933, all gold coin, gold bullion, and gold certificates now owned by them to a Federal Reserve Bank, branch or agency, or to any member bank of the Federal Reserve System. So that's the infamous Federal Executive Order 6102, signed by President FR, Federal Reserve, the man who's paid to save the Federal Reserve. And what that was the President of the United States using the law to steal from the American people because the central banking system that had been in effect for under 20 years had completely failed. There's no confidence in it. And it's amazing that people blame gold for the Great Depression. They don't blame the Federal Reserve for creating the bubble of the 20s, and then, you know, the bubble that led to the crisis, the loss of confidence in the system. And gold was just an escape valve. People trying to get off the Titanic onto lifeboats. And what President Roosevelt did is he confiscated all the lifeboats and let everyone sink with the ship. That's what he did. And that's why you had the Great Depression. And to placate people, he started the New Deal, which is led to the situation that the U.S. and most of the West is in now, of soaring national debts, bloated welfare state, the warfare state still there, of course. It's an instrument of the central bankers, as Smedley Butler and many others have said, or Eustace Mullins. It gives them an excuse to keep the game going. So that's why central banks hate gold, because gold is an escape valve from their corrupt and bankrupt system. And the only other thing that can, like barometer, that can say that their system's still working is the stock market, as you saw from the chart from the 1920s. So is it any wonder now that the stock market keeps going up? And it is irrational, in my opinion. I worked in the markets for over 20 years. I worked in the bond markets as a futures and options broker. And I remember very well, back in the 90s, if the stock market was going up as it's going now, bond yields would go up, because that would mean that the big money, the big investors would be worried that something had to be done to rein in all the credit and the money, because the stock market was too bubbly. So that was like it worked back then. But now the central banks are so much in charge of things that they will never let the stock market go down, and they keep the price of gold suppressed. Not even suppressed, but they keep it tough. They try to tell the public through their agents, which are the banks, the financial houses, the financial press. They denigrate gold. They call it a barbaric relic, like Keynes did. But all gold is a life vest, or a lifeboat on that saved people in times of crisis. It happened in the 1930s, and that the President of the United States had actually basically had to legally steal from the people to save the Federal Reserve. So until the Federal Reserve is abolished, things won't get better. But it's getting interesting. Just to let you know, looking at the long-term chart going back to 1914 till now on a logarithmic scale, there's a trend line that comes this year around 28,000. It's a big resistance coming from the high in 1929. So maybe we've got a little more room to run up, but it feels like hyperinflation. Maybe the bankers have shot themselves in the foot, and by trying to save themselves, they're going to actually destroy their Federal Reserve paper. And all hyperinflation is the loss of confidence in that paper. And we could see a mad rush to the asset. It has been tradition, as Ben Bernanke said. And I'll play that part of that clip. Ben Bernanke talking to Ron Paul in Congress, testifying.
I don't think they're money either, but they're potential asset. Why do central banks hold it? Well, it's a form of reserves. So why don't they hold diamonds? Well, it's tradition, long-term tradition. Some people still think it's money. I yield back. My time is up. Thank you.
So there you go. You could notice how Ben Bernanke had to think about it when he said, you know, why do you hold gold? And he said it's tradition. So there you go. So if you enjoyed this video, please like, share, subscribe to my channel if you haven't yet. You can also follow me on steemit.com, which is a social media platform where you can earn cryptocurrency called Steem by upvoting, by commenting, and by posting. Take care. Bye.